On behalf of the management and the board of directors, I would like to thank the bank, AMSA Bank, for this donation of the masks. As you know, we have been gazetted as a treatment center, so we are on the front line, and this donation will help us keep our health workers safe. So we want to thank you and say that it's going to go a long way, both for the front line health workers and also for other workers in this hospital.
We're really here at Kenyatta University Teaching and Referral Hospital as part of our broader commitment to the Ministry of Health to support the efforts of the fight against COVID-19 with personal protective equipment. We just brought our small token to KU Teaching and Referral Hospital of 1,000 KN95 masks and 20,000 3-ply masks. As a brand, it's really our pleasure to, in a very small way, support the collective effort, because we understand that that this fight can only be won if more people collaborate, more companies collaborate, and this for us is a small token, and hopefully it will go towards meeting some of the needs here at KU Teaching and Referral Hospital.
We would like to thank the team here very much for having us and being able to do the work that they're doing and being able to support the country as we manage the pandemic that is currently facing us. We know we shall overcome. We know a lot of people are going through challenges. We know a lot of people are having difficulties, and we are there with you to make sure that we manage and bring this to a successful close.
Simplify your life with Absa One account with no minimum balance or maintenance fees. Unsecured loans with a high limit for up to 7 years. Guaranteed cashback on swipe transactions. SMS 1 to 22268 to sign up. That's Absa. That's Africanacity.
Good afternoon, everyone. Hello, my name is Andrew Chakava, Investment Director at the Gracia Michelle Trust, to co-lead the institution's Gender Lens Investing Strategy. We're so glad to have you here today, this afternoon. The vision of the Gracia Michelle Trust is to nurture caring societies that value social justice to promote and protect the rights of women and children. In 2020, the Gracia Michelle Trust marks its 10-year anniversary by launching the Expanding Equality Initiative, which aims to catalyze and drive collective action that advances women's active roles and contributions in the economy and fast-track the realizations of children's rights with an emphasis on girls. It is, however, a year where the globe faces an unprecedented crisis of the COVID-19 pandemic, which has crippled economies and directed global attention to saving lives and shored up strained health systems in responding to the pandemic. Now, more than ever, the tenets of this vision resonate strongly at a time when globally the world has literally been flipped over as we fight through this COVID-19 pandemic and its impact on the social and economic life in the present, and eventually as we course to a time of recovery and post-recovery period in the future. We are delighted to partner with Absa Bank to provide support to small and medium enterprises, just to provide the necessary advice in what is a challenging period that is unprecedented with no clear end in sight. I would now like to hand over to Elizabeth Wasuna, co-creator and co-host, who is the Business Banking Director at Absa Kenya PLC.
Thank you very much, Andia. And good afternoon, ladies and gentlemen. Thank you very much for joining us in today's session. Today's session is a third SME webinar that we are hosting and a joint arrangement with the Gracia Michelle Trust. Thank you very much for being able to log in. We do appreciate that it can be busy, but we do understand that, you know, joining in to listen to this very interesting topic that we're going to be discussing, it's something that we think will be beneficial to both yourselves and us as a bank. First and foremost, I just hope that you're all keeping safe and that all of you are observing the preventative guidelines issued by the Ministry of Health, because your health is really important to us. As partners, we need to take care of each other's health. For those who are joining us from our last webinar, which was on leadership in crisis, welcome back. We look forward to having a very interactive session today. Also, I want to thank our panelists, Linda Onyango, from the CEO of SME Support Center. Thank you very much for joining us. And Dr. Wilmot Allen, founder and MD of Venture Lift Africa. Thank you very much for joining us. As I make my opening comments, I just want to ask that this be an interactive session, that you feel that you can at least come out of this with something that is useful, that will edify you, that will provoke your thoughts in being able to tackle this very interesting topic, which is business continuity planning. It is the basis of everything that we're doing right now. Getting this right would mean that you have gotten at least 1 or 2 steps ahead. During these difficult times, we are so committed as a bank, Absa Bank Kenya PLC, to continue playing our role as a leading financial institution in our country. But even more importantly, we remain resolute in helping our customers navigate through these difficult times presented by COVID-19 pandemic. SME businesses remain an integral part of our customer portfolio. We recognize that they are the backbone of the economy, constituting 98% of all businesses in Kenya. It's a big number, 98% of all businesses in Kenya. And this goes on to employ 14.9 million Kenyans, contributing 3% of Kenya's GDP. So we cannot take this for granted. Unfortunately, SMEs have been hard hit by this pandemic, but we are dedicated to continue working with you to ensure that you're able to sustain your businesses despite the prevailing circumstances. As you may already know, we as a bank have reviewed our credit terms and have communicated the same, and we continue to develop various options and solutions that we believe will cushion our customers against the financial difficulties presented by this pandemic. For instance, our business and personal customers are eligible for 3 months repayment relief, which is extendable up to 12 months upon application. This allows you to have cash flows to deal with your basic things like payment of salaries, as we see how the COVID situation will progress. Hopefully, it will not progress much longer. In addition, we have extended a credit life for 3 months with no additional costs. We have further waived all access charges to our business banking, our platform, an online platform, our Absa integrator, that enables customers, especially business customers, to transact real time wherever it is comfortable, as opposed to exposing yourself by coming out of your offices and your homes. Additionally, we are in to help the small and medium-sized enterprises to meet their obligations. So as a bank, we felt the need to step out and also put out our DNA there, saying that we do support businesses, our SMEs. And in this case, we're talking about SMEs who are our suppliers and distributors as well. And our commitment to them has been initially to say that any invoices supplied to Absa Bank will be paid within 14 days. And those that are less than 1 million shillings is paid within 7 days. And this is something that we feel is important to allow our businesses and our SMEs that support us as a bank to be able to thrive and continue to operate their businesses as usual. Another thing that we have done, and it shows our commitment to the industry, is to waive fees that we charge for our digital and cashless transactions to encourage our customers to avoid cash transactions. I think all of us are aware of the exposure that we put ourselves with and using cash, and therefore we're trying as best as we can to allow you to go cashless, and our teams are on the ground to have these conversations with yourself to ensure that you can go as cashless as possible. Why are we doing this? It is because we believe our customers' success is ours, and therefore our future together is important. We know that while this pandemic has caused massive disruption to most businesses, we are hopeful that you will overcome this, and together we can see to the end of to growing our business and our economy. It is really important to keep going. And if anything, this is to show that, one of the things that we've done as a bank also is to figure out what can we do during this period to enable us to work more efficiently. And for us, going digital as today, to reach out to yourselves as customers, to have this interaction as partners is very important to us. We continue to collaborate with like-minded organizations like Gracia Machel Trust, Strathmore's Business School, USIU, to offer strategic advisory services and pass on these conversations to SMEs all around. This webinar, as we are continuing today, is our third one, as I've mentioned. We have 5 more to go, and these are basically centered on 3 pillars: technical support, self-help, and leading you through this change. So we do look forward to our continuous engagement. And like I said at the beginning, if there's anything that we want you to get out of this, to be provoked, to know that you're supported, and we are here to partner with you through this pandemic. Thank you very much, and welcome to this most interactive conversation. Over to you, Andia.
Thank you so much, Elizabeth, for that wonderful introduction. I'll now go into the topic overview. So in early 2020, global consultancy firm Mercer surveyed companies around the world just to learn just how many were prepared for global outbreaks or pandemics. They found that 40% of companies have no plans for how to address this type of emergency. Previously, we may have been anticipating business continuity plans that dealt with cyber attacks, or we were dealing with political instability or fires, but nobody could have imagined the devastating and global impact of coronavirus. Furthermore, 92% say working from home is their primary option when working at the office isn't a possibility. However, what if your employees can't work at home either? Or worse yet, what if your employees' homes aren't there at all? No doubt, 2020 will go down in history as the mark of the beginning of a decade that was engulfed in a near Third World War, locust invasions, perilous floods, and the COVID-19 pandemic, to name a few. A business continuity plan has to take all contingencies into account. And right now, businesses are probably realizing that they didn't even imagine some of the events that could bring operations to a halt. Supply chains have been disrupted, and traditional modes of acquiring customers needs rethinking. Businesses that were once thriving or preparing for a surge in sales are now in survival mode. How do you prepare for the inconceivable? Well, today we have joined together with experts, technical experts that are going to take you through business continuity planning, as they say, from their experience. Before we go into those particular presentations, I would just like to give some clear housekeeping rules. So just the next slide for the housekeeping rules. What we'll have is that all participants will be muted through the session. We will have a Q&A at the end of the presentation. This webinar is being recorded, so you will be able to receive the information and share it, and you'll be able to have that information to refer to. We will also do some random polling throughout. And please, if you have a comment or question, kindly put it within the field. We will also check your feedback as you leave, just to make sure that we are designing these webinars tailored and customized to your needs. I would now like to go and hand over to my panelists, who I would like to give them an opportunity to introduce themselves. So the first panelist who will be talking to us is Linda. Linda, if you can just give a quick 1-minute introduction of yourself.
So good afternoon, everyone. It's a real pleasure to join you this afternoon. My name is Linda Onyango. I'm the CEO of SME Support Center, and we really are a business support center for SMEs. We provide business and investment advisory support to SMEs, and really for us, our mission is to ensure the growth and scale of SMEs through simple, localized, and sustainable solutions. So everything about us is simple, localized, and sustainable. And it's a real pleasure to take you through business continuity today. Thank you very much.
Great. Our next technical expert is Dr. Wilman Allen. Dr. Wilman.
Greetings, everyone. It's a pleasure to join you. I hope you're doing well. You are resilient managers, and we're so happy to speak with you today. VentureLift Africa is a transaction advisory firm, business management consulting firm. We also do linkages to help companies, particularly SMEs, enter into new markets and grow and scale faster. Look forward to speaking with you.
Thank you. And then we have our own technical expert from APSA as well, James Mushiri.
Good afternoon, everybody. My name is James Mushiri. I'm the Chief Operating Officer of APSA Bank Kenya PLC. I'm really glad to have all of you here with us today as we discuss and talk about the various options that we have as we manage our business our businesses through this pandemic season. It is a completely different kind of business planning and continuity session because we have not had these kind of requirements in the past. A lot of our business continuity plans in the past have been based on moving from one location to another when you need to do your business recovery. But this one here has to include social distancing. It has to include working from home and all the other things that we are doing. So happy to have you on board and welcome.
Okay, thank you so much. I think before we start, we're just going to do a quick poll. So if we can just run the poll right now. And please, if you can just let us know to what extent COVID-19 has affected your business. Please tick all that apply. Anybody that's here, please just participate in the poll. To what extent has COVID-19 affected your business? Tick all that apply. Significant revenue decline, inability to pay key expenses, insufficient cash reserves, business downsides or closed business uptake. The responses are still loading in, just waiting for you to respond and tell us so that our trainers have an idea. Thank you. So we've got about, we're still getting people. Okay, we've got about 49% of people still voting. So if we can share the results now, we can close the poll. And there, and I thought this was like good information for our technical experts to have, where we see significant revenue decline greater than 50%. We had 56% of you on this call that voted. So Linda, over to you now.
So thank you very much, Andia. That's very interesting to see that over 50% say, I mean, is it 70% say sales revenue has greatly been impacted by 50%. That's very worrying and interesting to see at the same time. And that's for me to say you're definitely in the right session. It's not all glim and dark. And we hope with Bill Mott after this session, you will see that. So I hope everyone can see my screen now. And I'll take you through business continuity management. And really, what is business continuity management? It's in simple terms, it really is that. How do I manage my business for continuity when there's a crisis? So it's really the ability to ensure the continuity of your key processes at an acceptable level and limit the impact of not having people on site, so people, suppliers, and so forth, not having your businesses continue. That really is business continuity. Now, what is the purpose for business continuity management? Typically, it's to ensure that continuity of your time-critical businesses. Even when there is a crisis or disruption, it really ensures continuity. It helps to ensure your management of your corporate assets that you have, whether it's plant and machinery, buildings, and so forth. It minimizes the impact of an incident. And so an incident like coronavirus and so forth, it's really to minimize the impact on your revenues and your profit. And it's really to train your staff and manage your people during this process. Now, why is business continuity very important? I don't know whether a lot of you saw this article on the Business Daily that said 75% of small businesses will collapse as a result of coronavirus. There was a warning that 75% of small businesses are likely to collapse, and a lot of them say they lack credit buffers and other resources to survive the slowdown in terms of customers and so forth. And so business continuity is really to help you see, how do I operate at a minimized scale, or how do I reorganize my business to really be able to face the crisis and still continue and not necessarily shut down. So the lens here is continuity. It's not necessarily shut down. I've had some people say, I'm not sure whether I will survive and so forth. So we are maintaining a lens of continuity as we look at business continuity management. Now, typically, I'll try and make this very simple because of the audience. Typically, business continuity has 5 key phases. Really, the first phase, which is phase 0, is really for you to understand the context of your organization. One plan for one organization is not a cut and paste for the other organization. So really, it's for you to contextualize your business in terms of the processes you have, the products you deal with, how you're geographically dispersed, and so forth. The first and second phase is really what I'm going to cover, and then Wilmot will cover a lot of the other phases. Now, the first and second phase is really about, one, the business impact analysis. So you have to step back and look at your business and understand, okay, so how has my business really been impacted? So that is really the first step. And the second step is really, what are all the risks and choices that I'm facing, and which decisions do I really make? That's a risk assessment. So I'll tackle business impact analysis and risk assessment. And then after you retrospect on the risk and the impacts that your business has gone through, then you think about, what are the recovery strategies I will employ, and what does my plan then look like? And then you validate that plan and you implement. So in a nutshell, it's really that. It's not a big jargon. It's really how do I introspect, develop strategies, and move and make decisions. Now, the first step, like I said, is really understanding the context in which you operate. Now, so you have to introspect on your organization, the product and services, the processes and the tools that you have, your locations and the stakeholders. So if you're widely dispersed, if your locations are several, you have to take that into account. And one of the things I have made easier for this session is really for us to look at a typical Kenyan case study. This is a retail organization. Bear with me and follow closely. So it's a retail laundry company that basically serves people who bring clothes for wash, and then they have a centralized washing outlet where they take all the clothes there and so forth. So they have 14 outlets where customers can bring their clothes. They have 10 in Nairobi, 2 in Kiambu, and 2 in Kajiado. It has 2 centralized cleaning points through hub and spoke. Hub and spoke means it's really served, one centralized processing place served by many outlets. So they do dry cleaning and laundry, primarily targeted at walk-in retail customers. In terms of their processes and tools, now you see how you will structure your organization while you're understanding the context. It's really, in terms of processes and tools, they have a human resource staff of 47, a management team of 5. They have 2 attendants in each of their retail shops that are dispersed across Nairobi. In terms of operations, the customer drops in the drops their clothes in the outlets between 8 and 7. This was what was happening before Corona. Then obviously orders are inspected and pre-booked, and then you get a confirmation through a point of sale system. And so every item is tagged with a unique number and barcode. I'm sure most of you have taken something to the laundry, and you're very familiar with this process. So this farm has 3 collection trucks, which collects across Nairobi every single day, all the clothes that have come, and they take it to the centralized washing place, and they tell you they will actually clean within 48 hours, but they obviously have an express service or a same day service. So payment is either made at booking or collection, and so forth. So this just gives you an idea of how you have to introspect on your processes. So in terms of finance, they have a POS system, PGCO machines, then they have daily collection summaries at the collection outlets and so forth. In terms of their stakeholders, they have landlords because they have rented their retail outlets where the customers drop their clothes, they're all rented. They have suppliers, so detergents, the tags and so forth. And then obviously they have bankers who finance them, especially their assets and so forth. Now, once we are done with that first step, where you really just understand what context am I dealing with, the next step is for you to conduct the business impact analysis, and I'll make it very, very simple. Now, it has 8 key steps, and business impact analysis is function and process based. So what happens is that you just don't look at it at a function level. So you see business functions are those ones that I've shown on my right. So some of you have research and development, your production and quality of sales, and so forth. It's not, you just don't focus on the function, you go a level deeper and now focus on the processes within those functions. So the first step is really understand the processes that are performed in each department. So for example, let's take one of their key processes for the laundry. So one of their key processes is distribution and logistics. So they have trucks that have to collect clothes, dirty clothes, every single day and take them to the centralized cleaning place. That's their distribution and logistics. And then once they are cleaned, also drop them back at the retail outlets. This is across Nairobi. So you have to dig deeper in the distribution and logistics function. They have the dispatch process, the collection process, and the drop process. So you go a level deeper. You look at all your processes. So you have to do that for research and development, production and quality and so forth. And the whole overall idea of the business impact analysis is to actually identify which are my key critical processes that I need to focus on. Where should my decision and efforts really lie? And so if we look at the laundry company, once you have understood the processes, for example, for distribution and logistics, the next step is to assess the various impacts of disruption. So with coronavirus, obviously, distribution was impacted. It was impacted in many ways. So you have the curfew, which says you cannot go. They need to shut down by 4 p.m. in terms of movement within Nairobi. You have the social distancing within the outlets and so forth. And so you have to assess the various impacts on the various processes. So you go into distribution and assess, okay, so if because of coronavirus, that means that my distribution is affected in terms of time, and it's also affected in terms of perhaps the amount of time I can spend on the road and so forth. Number 3 is assess the maximum acceptable outage for each of these processes. What that basically means is if there's an incident, if there's a disruption, what is my maximum acceptable outage? How long can I allow that process to go without it disrupting completely my business? So if you look at the laundry business, they promise the customers 48 hours, your clothes will be cleaned within 48 hours. Now that means that in terms of distribution, they have to collect it the same day and they have to deliver it perhaps the next day. And what that basically means, the maximum acceptable outage for the distribution and the logistics side of things is essentially nothing more than a day, because you need a day to clean and so forth. So maybe at least 24 hours or less you have to have collected. So this process, for you to promise the customer that everything will be delivered within 48 hours, it means the maximum acceptable outage is only a day. So you do that for all your processes and determine, so for how long, what is my maximum outage limit for each of these processes? Because if you don't address that, it then affects your entire business. The next step is to understand the people, technology, the vendor, and the resources enabling each of these processes. So in terms of the distribution and logistics, I've only picked one process to really explain this. You have the trucks. In terms of resources, you have the trucks. In terms of technology, you have the POS system that's on the collection side, and etc. You have the truck drivers in terms of the people and so forth. So you have to understand who is impacted in this process. The next step, which is step 5, is to identify all the internal and external dependencies of each process. So it's really who depends on this process internally and externally. So internally, in terms of the distribution process, it's really the retail outlets, the attendants at the retail outlets depend on this. The people at the cleaning shop depend on the distribution. If there's no distribution, clothes will not be cleaned and so forth. External dependencies, you have the infrastructure, the road networks and etc. that affects this process. So you go deep and determine which are the dependencies. Now, once you do that, you will derive the critical processes of every department based on their derived maximum acceptable outage values. So let me explain that. So you'll find that each of these business functions have processes that have lower outage, acceptable outage. So for example, like account management, accountancy. This is done perhaps once every month. The financial statements, the monthly statements are done once every month or once weekly. So you can say the maximum acceptable outage in this case maybe is 2 weeks, a week, depending on your organization. So once you go through each of your departments and look at the processes, you will determine which is the maximum acceptable outage in terms of time for all your key processes. And then you'll be able to determine, based on that, which are my critical processes that I need to address. So that's really step 6. And then step 7, you ensure that you have taken into account all the dependencies of that process. So like the distribution, the dependencies, the retail outlets, and so forth. You take into account that, and then you have to validate, of course, this with your department. So usually business impact analysis is a collaborative process that happens between teams and so forth. So it's not necessarily only done by the CEO, it's done collectively by the team. Now, best practice is really that this process is done ahead of a crisis. Like, so many corporates have primarily done this before. I'm not sure many SMEs have ever done a business continuity plan before, but it's supposed to be done how it was envisioned, is to be done before a crisis. So then you estimate, and so that when a crisis hits, you're able to see what decisions you take. But coronavirus was here with us. We all say it was unprecedented and so forth. So the question is then, how do you go back to your processes and look at which are your critical processes and the decisions you really have to take? I hope that was clear. And so after you do the business impact analysis, you have to do what is called a risk assessment. So assess all your risks. These are like, they're independent but conjoined. So assess all your risks. So with coronavirus as a key business disruption, you have the virus infection as a key risk. So the potential of your employees being infected, you have the safety and security of physical sites. This is not for everyone, but for some of you, you have some of the risks in terms of the impact of your business and threats from time curfews and so forth, customer unavailability. So for those of you in retail, you assess some of these risks. So for example, the laundry, a lot of people were now working from home. So who's really going to clean their laundry and so forth? So customer availability is a key strength. And when you're doing the risk assessment, you're only trying to answer 2 questions. Let me make it simple. How do I know which risks to focus on? And what do I do about these risks? So how do I know which risks to focus on? Because you're faced with many decisions, really, and many risks that have been brought about by the coronavirus. It's really, how do I know which risks to focus on? And so you ask yourself, so what is the likelihood or probability of a specific event? The virus infection, the likelihood is high, and that you rely on the statistics from the Ministry of Health. And what is the impact? So the impact of a virus infection on your business is really that employees will not come and so forth. And so what do I do about the risks? You either accept, you really have 4 choices. You either accept, you either eliminate it, transfer it, or mitigate it. So when you say accept, it's really you live with it. The virus, the risk of the virus infection is there. And so it's really, how do I mitigate? And you've seen people have put sanitizers and so forth. Eliminate where you can, and then transfer the risk. In the case of safety and security of physical sites, if you have insurance, it means you have transferred the risk. Now, I wanted to tie this back to the case study outcomes and really bring it home for the SMEs. So what happened in this case study, the laundry company? Because a lot of SMEs don't necessarily anticipate risk and plan for it. What happened the moment Uhuru made the announcement is a lot of people closed for 9 days. And then you quickly said, safety first, and so forth. What this laundry did, which was good, they notified all their customers that they will be closed within 24 hours. So they actually did that. So what happened is after 9 days, they reflected and chose to reopen. So sales dipped by 70% during the reopening, basically because a lot of people were not taking their clothes to the laundry because you're basically working from home. And then, so right now, as we speak, they're currently at 50% sales level, maybe because business has started picking up. So what do they do after the 9 days that they opened? They reflected and opened on a revised business continuity plan. So what most of us did, we actually did this retrospective after the event. But going forward, it's important that we actually do it in anticipation. So what did they do? So they reduced the open hours and continued to keep the clients engaged and informed. And I really loved what they did because they kept, they focused on customer retention. Some of the retail customers, some of the retail SMEs have basically left things as is. They're not engaging their previous customers and so forth. So what they did is actually call every single customers, and they have retail customers, so you can imagine, it kept them engaged that we shall be open soon and so forth. I found that very impressive. So they focused on customer retention. And then in terms of their locations, because of social distancing, they had only 1 attendant per location. And really, so that means they reduced their staff critically from 6 to 16 out of 47. So they had people proceed on leave and others on unpaid leave. One of the interesting things they also did is they took an immediate decision to close 2 outlets. Really, because they said, in this case, let me eliminate risk. The risk of customer and availability of further dip in revenues. So what they said, these 2 outlets have previously not been performing so well, and the future growth potential is not really making sense. So instead of incurring overheads, they took a decision to close 2 outlets immediately, and they felt COVID would further aggravate this performance. And another thing they did is they renegotiated rent payments. Remember, they had 14 outlets. So you can imagine they had rent premiums across, and you know, laundry is in malls, and it's pretty much it's pretty much expensive in terms of rent. So what was very interesting for this team is that they didn't have a blanket rule for different landlords. Different landlords gave various restructuring methods, and that's very important to keep in mind. As I chatted with the CEO, he said it's very important to have an open mind as you negotiate, because the outcomes will be different with different people. So what happened is 5 landlords agreed on a structured repayment plan. So you can pay some now, you can pay after 2 weeks, you know, so it's structured, the same amount, but structured. 1 was unwilling to negotiate anything. 5 offered a 50% relief. So that means the first month during the COVID period, you don't pay 50% of the rent. And then one offered 100% waiver, which was really an angel in essence, and others offered, subsequently offered 50% for the duration of the pandemic. So these negotiations help them save money, the reliefs help them save money, and the overheads that they literally faced, because they literally know the sales are at 70% during reopening, dipped by 70% during reopening. And then they renegotiated a 90-day moratorium, and I must commend the banks. They really supported SMEs in doing this, and really renegotiating the existing facilities. So they got a 90-day moratorium. And so when you speak to the CEO, he says they're optimistic to survive the pandemic, but uncertain about retaining 100% of both its external and external customers and its employees. So whether they will continue operating at 16 employees and the rest will never really come back is still uncertain. But one thing is for sure, the swift planning of decisions has really saved them. And that's really where I want to end my talk today. It's really about swift planning and making decisions. So whichever decisions you have to make to ensure business continuity, you can do that. Some SMEs have chosen to adopt a different business line and keep the other one on the side. But for those who really have invested in the businesses and are looking to go into the future, the 70% that I saw, that sales have dipped 74%, especially for retail clients. It's really now about how do I scale down my operations? How do I adopt a business continuity plan with a scaled down operation and still maintain and ensure that I don't go out of business? Thank you very much. So just the last slide. Sorry, Anja, just the last slide. In case you need to get in touch with us, I'd forgotten this bit, feel free to register on our website. And we are typically happy to support. Once you register, you should hear from us within 24 hours, and we shall be able to support you with simple, localized, and sustainable solutions. Thank you very much.
Thank you, Linda, for sharing that. I think we're ready to go to Wilmot, but just before that, I wanted everybody to have a look at the poll results again. I can see we're a number again that have joined us. Unfortunately, we're not voting now, but just looking and seeing that 70% of the SMEs have suffered a significant revenue decline. Only about 36% have received a business uptake, and about 54% are struggling with insufficient cash reserves and a 48% inability to pay key expenses. So thank you for that. We're now going to go to our next speaker, Wilmot, to continue with the phases of business continuity planning. Thank you.
Thank you very much, Andrea. And thank you, Linda, for that wonderful presentation. We are now going to talk about strategic planning for risk mitigation. Let me just pull up the screen and we will get started. Okay, I trust you all can see my screen now.
So just put it on presentation display, Wilmot.
Great, yeah. Thank you. Great, we will continue the conversation today of business continuity planning, focusing on business continuity and risk mitigation. Linda has given us an excellent presentation about assessing impact and a case study, a real life case study, based upon the survey that probably resonates with most of the listeners in terms of how to set your business back on course through a risk assessment analysis. I want to first of all start with framing the conversation. so much of what we talk about when it comes to risk mitigation practically, things like scenario analysis, testing, and implementation, focuses on providing you tools that are quantitative. But really, if you step back in the context of the world in which we live today, this is never before a time for values-based leadership. What do I mean by that? It really is important for managers and entrepreneurs and even staff to understand the importance of trust. Most managers at this time of companies are concerned about whether or not you'll have the ability to meet a cash payment, or whether or not your runway for cash will last as long as you've planned. If customers will actually come back, and also on the demand side, from the standpoint of customers, will the company be able to offer the same quality of products and services? And so values-based leadership, through which we focus on trust, I think is a really good framing to understand the importance of business continuity and risk mitigation. A study was done by Edelman Trust, the Edelman Trust Barometer for this year, and it's interesting in looking at the dimensions of trust. You can see it on the lower left-hand side there. It's interesting that in the case of these institutions where you have businesses, you have NGOs, you have media, and you have government, no institution seen had a rating that was both indicative of competence and ethics. And even business, surprise, scored pretty well in terms of competence, but in terms of ethics, not so much. And so we want to encourage you, as we give you these tools to think about, that we also think about leadership as managers, leadership as staff, and whatever your functional role might be, so that you see yourself as the arbiter of trust, because that's what gives people the confidence to continue to come as your customers, gives your staff confidence to continue to perform at a very high level. And let's get started. So today, in the second half of this, we'll look at strategic planning for risk mitigation. We will first start with scenario analysis, and then testing and implementation. There are some other strategic considerations for business continuity, and then we want to return to this whole topic of business leadership for continuity. So first of all, risk mitigation should be data-driven and address real business gaps. The data-driven approach must be aligned to milestones that can build trust and support business continuity. It's important to identify those areas. Linda's laid, I think, a very good foundation for what I'm going to speak about today, and my presentation is actually a continuation of those excellent points, but digging more granularly into some of the tools that you can use for scenario analysis and testing and implementation. Rather than eliminate them, rather than avoid them or just accept them, I want to help you to really think about how do you reduce the impact of that risk, because risk, as you know, in this environment surely does exist. And we do that through strategy, policy, but also collective action. And it's important to decide what those milestones are in relationship to baseline numbers. And so scenario analysis is going to help us think about contingencies and focus on, really what are the functional areas that are most at risk, or the business lines that are most at risk, and then how do we go about analyzing? Well, let's get into that. Let me just explain this table. It has a lot of information, but I promise you there is some method to the madness that you see on the screen. Contingency planning cuts across functional areas and/or business lines. So the way to read that, we're going to look at 3 different areas: sales, staff, and supply chain. We use the first column to the left of that, baseline metrics, to really pay attention to and focus on what are the areas of that business where data-driven analysis really should focus on. And then as you think about looking at those areas, how do you kind of think about analyze them, over what timeline and with what frequency? And then the tests, the key tests, are in that next row, and those numbers 1, 2, 3, 4 correspond to those baseline metrics. And then the mitigants, what are the things you can do to reduce and avoid the impact of those risks? And then finally, implementation. We're going to take an institutionalization approach when we think about and talk about implementation. Great. So first of all, let's start with sales. One of the, I think, great tools to use is what we call a margin analysis. These are largely accounting and financial terms. I'm sure quite a number of you are very familiar with them. They're simple techniques, so I won't go through them on a blow-by-blow basis, but right now we'll just focus very generally. Margin analysis for efficiency in terms of sales, in terms of conversion of sales. And secondly, unit economics for cost per customer, and then accounts receivable management. What is the average collections period? Why is that important? Because if your sales do not meet the projections, then obviously that has implications for the financial stability and sustainability of your company. We recommend that you project these out 3 years, but I think they're depending upon the level of this risk, and we'll give you a tool to look at how do you measure the level and rate the level of risk. It's really important to think about this in terms of the frequency, whether you do it monthly, weekly, or quarterly. And then the test for the margin analysis is in terms of looking at the operating profit versus over sales. That's the margin, the operating margin, sales margin is as we have indicated. And then unit economics is really important for understanding the driver of your cost and making sure that you're able to cover those. Cost of goods sold over customers will give you unit economics for cost per customer. And then accounts receivable is the average account receivable over net sales times the number of days. Another tool you can use is the strength, weaknesses, opportunities, and threats analysis. And the mitigants in this case might be a shift or a refocus of the product line or a targeted sales campaign to actually, after you do analysis, understand in terms of your sales channels, the higher profit sales channel. Maybe it's investing or spending more time going after that higher margin sales channel or buyer, if you will, over another category of buyer. And then thinking about the higher average collections time could also require a change in terms of the payback period, adjusting the terms so that smooths out the frequency or the likelihood of payment. A standard sort of implementation recommendation we have is for a quarterly review of sales and the risk metrics and the test. And perhaps there's an opportunity for an online survey for product satisfaction to determine some of the new approaches to marketing. And finally, monitoring and adjusting collections as needed in terms of tracking the industry as well as your company. I'm going to quickly go through key staff. I think that most managers have had to deal with this point at this time in terms of making that decision of reduction or doubling down in terms of giving existing staff more responsibility, giving paid lead off, et cetera, et cetera. And I think one way to do that, the first way is what is the contribution in terms of the overhead costs per department and the perceived value, the contribution of that particular department. How efficient are they in terms of sales, the revenue that comes in per employee for that department or for your business overall? And then the amount of turnover, the monthly exits over the monthly active staff. Why is that important? Because that becomes a risky sort of functional group or business group if there's a lot of turnover. And then I think the rest of that is pretty self-explanatory. Let's go to the next slide. And then in terms of suppliers, this is something I think is of interest to all entrepreneurs and all managers. Accounts payable, monthly delivery delays, supplier diversity. We're going to look at something called the supplier risk assessment tool. Again, we recommend that you, based upon how you assess that risk, to align the time that's needed in terms of the frequency. And accounts payable trends, looking at accounts payable turnover. This looks like a complicated formula, but it's actually pretty simple. It's total supply purchases over the sum of your beginning point accounts payable, end point accounts payable over a given period of time, and the average of that is just divided by 2. For supplier diversity, monthly delivery delays, what is that number? And how often and how is that impacting your business? Supplier diversity, the number of supplier options might be something that you want to consider if you feel that the terms are not as favorable to you or there are some problems with delivery of that supplier or your payment to that supplier. The terms might be might be able to be negotiated so they're less onerous to your business. And also, again, in terms of implementation, we give you some guidelines there. I'm going to go down to the bottom, and then we're going to take a look at this supplier risk assessment tool. The important thing is to think about institutionalizing your risk and recovery strategy. So that includes deciding what metrics you want to use, the tools and the tests and implementation, putting them into a data folder, but also combine that with a good outlook on economic forecasts in terms of not only your sector, but within the country and also within the region. And then there are some other trends that you should look at as well. It's important to have maybe a team to monitor that. Now let's look at this supplier risk index. I'm going to go all the way to the last slide, which is in the appendix. And you can see very quickly, it's a tool, and at the bottom, you can actually access this online. There are a number of industry areas, areas of focus on the left that you should consider as the categories for assessment in terms of the risk associated with your supplier. And then a suggested scorecard criteria. The way this works is also the next column, there's a rating that you assign, how you assign that risk. And then the weight is a combination of the supplier risk rating and then the average rate that you assign to that in terms of how important it is, and then the product of the area weight and that rating gives you a weighted average. I encourage you to go through that. It's a pretty intuitive tool to help you get a sense as to what the supplier risk is for certain aspects of that business line. I'm going to go now to the next area and then thinking about some of the other considerations for mitigation. First of all, stakeholder management and reporting. Depending upon the size of your company, it really is important to have a designated team to assess some of the things that we've been talking about, different scenarios, testing and implementation. That becomes what are their tasks. And maybe depending upon the availability of your board and the interests, aligning them with at least one member of the board for mutual accountability to form a steering committee for recovery. And maybe along with that, that group can then publish or work on producing what we call a risk recovery report on a quarterly basis or as needed, so that all of your stakeholders are informed, everyone is informed of what the risks are, but even more importantly, what the mitigation measures that your company is taking. Again, going back to the value-based leadership principle that we lifted up before we began, trust is emphasized, supported, and demonstrated in ways like these. You also might want to consider outsourcing and working with, in particular areas of risk, professional service firms. I'm sure all of you have thought about this in terms of, is it time for me to bring in a lawyer when it comes to HR management? If I'm a tech company, is there something related to intellectual property that I should keep in mind? And maybe it's something that's outside of my technical expertise, and there is a professional firm, a law firm that might be able to help us with this. And then depending upon what the risk might be as it relates to environmental risk, there are environmental, social, and governance consultants that can be hired. And it's also good to, just in terms of keeping conflict of interest away, to hire perhaps a firm that has no direct ties to the company or to the boards. The last topic, I'm a former M&A investment banker, and I know that this is sometimes a sensitive issue to talk about a business continuity strategy as a divestiture. That means giving or divesting or giving away the company, or in the case of a merger, combining the company with another one. I think diversification, appreciation, the value of the company, IP acquisition are some of the reasons why you would think about that. And there are various strategies that go along with that. I'm going to move on to leadership. And I think most of these points are pretty intuitive, but we cannot emphasize enough the importance of not only presenting a data-driven approach that is thorough, that is consistent, and it's clear, and that's communicated, but at the same time, to take on this leadership mantle in a new way to build trust among your various stakeholders, whether it's board, shareholders, most importantly, your staff members. And so a paradigm that we like, that we adapted from George Bolden, is Guy Bolden, is this one that you see on the screen now. Being a communicator sometimes, We think of that as the CEO, as being the boss person, that comes naturally. But being authentic is another dimension of that communication requirement that often is overlooked or not taken as seriously. Being authentic is not just telling the truth, but conveying that truth in a way that's sensitive to the context of the hearers. So that means communicating not just this is a business risk, but these are implications of it for our business potentially, so that the entire team or department can also begin to do their own planning. Informing early and often, shepherding your company through the priorities that it will have to face in a time of change, and empowering staff to be a part of that decision-making process. Oftentimes in hierarchical firms, that's not something that's well received, but we believe that it makes a difference in these times so that trust can be established between staff and management. Also being a connector, looking to be present with your team. Zoom, WebEx, these are tools, but they don't really replace being present. As you all know, we all can be on a Zoom call and see each other, but not really be present in terms of how we communicate, how we connect, etc. And being empathetic. And last but not least, is looking to reaffirm the mission periodically on a more frequent basis to rally the morale of the company as you go through times of change as we are in now, so that you can stay on mission and work a lot better collaboratively. We're almost done. This is the last slide I want to present. And part of that leadership also is understanding your culture may have to change now. As people are working from home, as you go through this recovery process, it's really important that you have the right policies in place for data security, people working off-site, checks and balances on remote work, and create a culture where that's sort of celebrated. And working from home or social distancing, the new norm, as everyone is referring to it as, is embedded into your culture and the way you plan your meetings, your work, and your engagement with staff as well as with stakeholders. Thinking about decentralizing, obviously, if the economics of your business require that, because of cash constraints, you've already thought about this. But also in terms of being in line with COVID compliance procedures at work, but also making it easier now for things to get done, having effective reporting protocols, effective timelines, but thinking about whether or not they need to be as detailed and as deep as they once were. And the last thing, we do want to also offer you some operational policies to think about in the COVID-19 business context. We've given you a URL for you to actually review those policies in your own time. Basically, it's a checklist. It's a checklist that allows you to ascertain how COVID ready your business is. I'm going to stop there. Again, thank you so much for your time. If you want to reach out to VentureLift Africa, you can do so at simply Wilmot, my first name, at vlafrica.com. Thank you so much.
Thank you so much, Wilmot, for that. We now have an opportunity to interact with James. So Wilmot, Linda, thank you so much for your insights. And we'll get a chance to interact with the audience. James, you're sitting there as the Chief Operating Officer at ABSA. So please weigh in on business continuity as you know it, as you've been practicing it, and what more can the small and medium enterprises do? Thank you.
Yes, I think listening on, coming back on the back of those two presentations, very powerful, very strong, and very educative. Bringing it home to us in ABSA, once we got the news about the prevalence of the pandemic, the coronavirus pandemic, one of the things we do is, first of all, is ensure that we protect our staff and customers to ensure that they are able to continue work. So we looked at our teams and looking at how they work and enable them to be able to work from home or work from different locations. Like I said in my introductory speech, the resilience that we need to build under this environment is very different from what we have done traditionally in business continuity in the past, which was primarily driven by inability to access certain locations or inability to access certain systems, and therefore this being different in that we needed to also be able to get people to work from different locations because of social distancing. Then we had to look at who works where and who does what, and in so doing, technologies become very important to enable people to work from home, to enable people to work from locations that they haven't worked from, but also putting protocols within the organization to ensure that people manage communication between themselves in a different manner. So you'll have things like restrictions on movement between floors. You'll have restrictions on movement between buildings, but ultimately it's aimed at ensuring that we have our business moved on. In looking at the customer side, we've actually done quite a bit to ensure and support the customers to go ahead. We have reviewed over 50,000 customer facilities to ensure that we support them to be able to carry on. This is worth over 53 billion shillings, and I think that is a significant contribution to ensuring that these businesses continue, because when the business continue, even our own business continues. We've looked at supporting the people who are directly involved in looking after those affected, and in so doing, we have invested in or we have supported in the purchase of PPEs, personal protection equipment. This is in addition to creating opportunities for counseling and support services in conjunction with some of the suppliers in the market, and all that helps us support and manage our customers and our staff and be able to drive things forward. When I come down to SMEs, I think the pandemic as it is an opportunity for SMEs to reorganize and rediscover themselves, because as it is, every business essentially is a solution to a problem or an enabler to that solution. So if we find that you have been working in certain ways, but because of the pandemic, you cannot actually continue doing so, then you need to look as a business, what else, how else can you deliver that? So, and the example that we got around the laundry business, I think is a great example of what we can do. And this is what we're encouraging our customers to do. And this is what we're encouraging people to look at all their businesses and see what they can do. When you look at the other things that we do internally within the organization, we are working to ensure that all our staff can work from home, so enabling them to have the technology and the other facilities that they need to do that. And that presents a business opportunity. So if there is somebody who's in that business line, then probably they should be able to pick up that as a line of business that they can develop in. And it's the same as all the other businesses that have to readjust, and therefore in so doing create a new need that needs to be supported. As ABSA, we are supporting also businesses that are directly involved in manufacturing of equipment or materials that directly go towards mitigating the COVID-19 pandemic. That is an opportunity again for business. So when we look at how we have done, we've had to look at how we reorganize our own working environment, which is critical. We've looked at how we reorganize, how we support our businesses, and we continue to develop that to be able to ensure that we have a resilient plan that works for us, but also works for our customers. And I'm using the word resilience because today we are dealing with COVID-19, and there'll be other pressures maybe in the future. There have been others in the past that actually put strain on our businesses, and we have to be able to drive that. A response from different businesses and different companies may be different, but the ultimate goal and objective is to ensure that the business survives beyond the pandemic and ensures that the customers keep going on in whatever they do. So it is important that when you have a situation like this where you need to go through a recovery process or a continuity process, that you have clear communication between yourselves and your customers, because if the customers don't know why you have changed your plans the way they are, then they may not be able to understand why you are making certain steps. But also, as you make those changes, it's also good to consider what are the things that the businesses will need from yourself to be able to carry on. So, for example, for us, we've encouraged our customers to move to digital channels. And in so doing, we've also taken out some of the costs and charges that would go with digital channels. That way, we are directly supporting the business people to be able to continue in this difficult environment. So it is important that every business looks at a detailed plan of how to go through a pandemic. And it may not be the same level of detail for everybody, because organizations have different levels of complexity, and therefore you don't have to invest the same level in terms of continuity as probably a global corporate, if you are an SME that operates in the country. So we need to be able to keep these plans also active. We don't only just create them when the pandemic comes through. It's something that we need to sit through and say, every so often we look at the plans and say, are they workable? Can we make them better? Can we move something different? Can we do something differently, or can we drive a different behavior with our people? Because when you have resilience plans, when you have plans that require that you do things out of the norm, then there's an element of culture change, and that is something that we see very clearly in the organizations when we are doing this. So we also have to prepare our people. So we have to go through all the stages of testing, making sure that this is workable and that is understood and it's well documented, and it actually goes to meet the expectations of the business. Ultimately, the purpose of the resilience plans is to make sure that the organization survives through that particular challenging moment, and that's what every organization, every business should be able to put through. Unfortunately, some businesses get affected more than others in this regard. When you look at things like the airline industry, it's a lot more impacted than some other industries, and they have to look at how do they continue with that business and in the circumstances. And this is where financiers like ourselves would then come in and have a conversation with them and see how we can manage the facilities that they may be having with banks. So it is always good to emphasize the points made earlier by two co-panelists. It's always good to ensure that we have the right level of planning. We understand the risks posed by the challenges properly, and that we are able to drive actions very clearly in each of the scenarios that we have. I think I'll stop there and go on to the next session. Thank you.
Oh, thank you so much, James. So there we have it. We had insights from Linda, who gave the overview of business continuity planning and specific case studies so that we can apply. We have Wilmot as well that went deeper into scenario analysis and some of the metrics that we can use, and also not forgetting the really important aspect of leadership and how. And then we had James tying it all in, demonstrating what ABSEC has done just to be available. I think all of us, when we say we're going to get money from the bank or we're going to transact, we've been feeling that support. So in terms of those essential services that the banking sector continues to provide, and the supports and the enabling environment with supporting the SMEs to go digital, and what the bank is doing both for its customers but towards society when we look at the broader PP. So this is a time now for us to interact, really to listen to some of the questions that you have. Please feel free to raise your hand, put your question in the question box and the chat, so that I can basically read it out for particular experts. So right now, I would Linda, this question is from you. It is from George Aru, and George is saying, to Linda, BCP is like buying an umbrella before the rains come. With the benefit of hindsight, what practical measures would you recommend for SMEs to deal with unprecedented situations like the COVID-19 pandemic? So I love that analogy of buying an umbrella before the rains come. Yeah, Linda, That's to you. And I think this one I will ask to Wilmette so that we have, as an SME, is it the right time to make new investments? And is it the right time to make new investments? And for James, there's a couple of people asking about what support is ABSA providing in financing new ventures during this period. Okay, so I think if you guys can tackle that while more questions come in, please everyone feel free to just put your questions as everybody's answering. Okay, go ahead.
Okay. Okay, thank you very much for that question. So it's like buying an umbrella before the rain comes, but the rain has come. The rain has actually come, unfortunately. So it is actually putting the umbrella in the rain right now. So how would you practically handle the situation? I look at it from three simple areas. So you have one, as a business, you have your revenue pressures. So you have either your sales are declining or your price is increasing and so forth. So you have your revenue pressures, so meaning lower sales. You have your cost pressures, meaning salaries and overheads that you have to pay with limited sales. Then you have your cash flow pressures, which are brought about by all the assets, either the facilities that you have and so forth. So if you look at it practically like that, that's three key areas. In terms of the revenue pressures, how would you deal with it? One, if it's to increase your sales, if you can go online, like James said, go online. If it's to sell the current stock that you have, for some of you who are in retail and had ordered a lot of stocks, if you're going to give bulk discounts and all that to let go of some of your stocks so that you can generate cash, do that. So it's just about how do I increase my sales and either at the same price or at incentivized prices. In cost pressures, how do I maintain how do I restructure my staff, whether it's unpaid leave? I've seen people do that, of course, within the confinements of the law, whether it's rent cost negotiations and so forth, the cost pressures, you have to deal with that, restructure, renegotiate. Cash flow pressures, it's really about, if there are facilities, like James said, I think the banks are really, they're really opening up. If you're a bank customer, renegotiate your facilities and buy some time to really be able to survive. So I think I would answer it like that, where that three-lens approach. Thank you.
Okay, Wilmette, do you still remember your question? Thank you, Linda.
Yes, I do. Investment.
Okay.
Would I be investing right now?
Yes, and I'd just like you to add, if you're doing that on Julia is also saying that she feels when we discussed risk mitigation, we need to talk about insurance because it's quite important in terms of what insurance can do to support assets, cash flows, and mental health. So you've got investments and insurance.
Great. So investment, sure. I think you should assess your insurance coverage in general, right? That should always be, even without COVID, because things go wrong. The impact of COVID largely exacerbates that. And so I think that's where perhaps if you need support in doing that, going out to a professional insurance provider can really be of great assistance. So, but beyond insurance, I think we've touched on a few things. In terms of assessing investment, I think a good rule of thumb is in terms of sales, where are you realizing, in terms of your product line, the greatest amount of profit? So that's a unit economics analysis, and the rule of thumb is you want to continue to invest in products where your revenue is increasing, but your cost base is staying the same or actually declining. So if that's not true, if you have 4 hair care products in the public domain that you're selling, you know, it should be pretty clear how you can decide which one to continue to invest in and which one you might want to discontinue. The other thing I think it was said was technology. Technology in terms of how do you now reach new customers? and along with that, new relationships to reach those customers. In this time of social distancing, that's hard, but when we're at home, if you're not reporting to the office or even at the office, you have time now, I think, to establish new relationships, not only for new clients, but strategic partners, et cetera, et cetera. And a couple of free investments that are no cost to you except for time. This is a great time to become better at your craft. So if you're an accountant, if you're a marketer, there are plenty of online resources that are free. And so learning to build up your management capacity is a worthwhile investment during this time of COVID.
Thank you so much, Wilmot. And James, there was a question really about how ABSA is funding new ventures. And I would just like to add another one from Sammy Fuku, who says, what incentives does ABSA have to cater for small farmers in agricultural counties like Nyandura? Let's just say small farmers as well.
Yeah, thank you. I think in terms of supporting financing of new ventures, I just spoke earlier and said that we are, for example, setting aside funds or set aside funds to support businesses in the space of anything that goes towards manufacturing for PPEs or anything that meets the needs for the COVID-19 pandemic that we have. So clearly those are new business ventures or maybe modifying business ventures because they may not have been the things that the companies were manufacturing before, and we are supporting that. In terms of the other area that I would like to mention on this is our overall sustainability agenda, which we are taking very seriously and building and helping women in business grow, helping people living with disabilities and the youth actually develop themselves in entrepreneurship, and it's part of all the training that we have been doing across the country. You probably have seen the seminars we've held in various parts of the country around this, and that is really important. It underlines our need and our desire to support businesses that are starting up or have just started up and need to be supported to get bigger, and in ensuring that they have the right level, not just of finances, but also knowledge to be able to understand how to run their businesses. So we are doing that, and we're looking to ensuring that we support this sector. We've set again aside significant funds for that particular purpose to be able to grow that sector in our business. So we are looking at the opportunities that arise even in this particular pandemic session, and we know that because every business is really a solution to a problem, then clearly, if we say that the pandemic has created certain challenges or problems in society, then there must be people working to develop solutions for those problems. And that is what we want to finance and be able to get people to grow with. Obviously, subject to the terms that will make it a viable business, both for the business person and ourselves. So that is what we are doing on that. And I think that covers literally even the second question about what we are doing, because we don't specifically focus on a location, we focus on the opportunity. And the opportunity exists across the country, wherever this need is and wherever this kind of requirement would be, then we'll be able to sit, discuss, and work with the various parties and agree on what solutions we can work for them. Thank you.
Oh, thank you. Oh, thank you so much, James, for that. I've got a comment really from Samuel, just saying that the session is quite insightful. And he believes, just echoing what Wilmot said, that this is the best time to double down and seek new opportunities in the wake of shifting and emerging opportunities. There is one more question that I think if any of you can answer in a minute. It really is about how often should these plans be reviewed? We've talked about having plans, setting them up. The question is how often, once they're there, how often do they get reviewed?
If I can go first, I think from our perspective, these documents are usually live documents because you have a lot of information that tends to change. For example, your recovery site may change, your contacts, your personnel, all that. So you need to keep the documents and the plans live so that you are able to ensure that they are most current in the event of any eventually anything happening to the business.
Okay, thank you so much. I think now just before we wrap up, we're going to do one more poll question. Thank you, James. Thank you, Wilmot. Thank you, Linda, for sharing all of your insights. As I said before, you are going to get access to the recording. You're also going to get a copy of the presentation. People are asking for contacts. So Wilmot, I think you will also update so that the contact is there on how they can get in touch with the experts. And for the Apta Business Club clients, there will be more information coming up. So if we can just run our second poll that we're doing now. And this is just to make sure that we are holding these webinars at a time that is convenient and easy for you. We started out at 2 p.m., but we know that everybody's adjusting to the new normal. So if you can please take it, just tell us which is the best time and easiest time that you would like us to conduct these particular sessions. So I hope you're all voting right now. You can see the poll question. I'm just trying to get more of us. We've got about 45, 46. If we get about 50% of us just saying which time, just to make sure that we can continue to bring experts to you at a time that is most convenient to you as small and medium business owners. We recognize that you have multiple activities and it is a high pressure time, and we want to make sure that this is happening within the best time. Okay, we're now sitting at about 57% has voted. So if we can just share those results right now. Okay, I think we're sort of, we're going between 11 a.m. to 12:30 p.m. seems to be a good time, and there's also 2 to 3:30 p.m. So thank you so much. We will continue to test this as we have our upcoming sessions. But thank you for taking the time to give your particular insight. And now I would like to hand over to Susan Situma.
Thank you very much. As Andy has said, my name is Susan Situma. I head SME banking at Absa Bank Kenya PLC. I really want to give a big thank you to the clients that have logged in and our prospective clients for making the time to actually invest in their businesses through this forum. I want to thank Linda Onyango and Dr. Wilmot Allen, together with our Chief Operations Officer, James Mushiri, just giving very useful insights to SMEs during this period, and Andia, our partners, Grasa Michelle Trust, in bringing the series of these webinars to yourselves. I must say that at Absa, we really are thinking about our SME customers and thinking, how do we make sure that we come and support you where you need us most? And we have other series of webinars lined up for you. In particular, just before I go to the next webinar, we have a mentorship session, because I do understand this particular topic that we've gone through was quite heavy. Just looking at the stuff that Linda shared and Wilmot, that was quite, engaging, and you probably want to think through that for your business. So we have a mentorship session that will be conducted on the 16th of June. That is next week. The timing is 11 to 12 p.m. So really close to the kind of time that you voted that you can be available. I'd recommend that you register for that already, so that during that time we are able to go into details about your business. You can ask specific questions. We had a mentorship session last week on leadership through change with different presenters that shared with us on that, and it was very insightful, very useful, and I would recommend that you actually register for that session as well. But just looking at our next sessions, it's really a follow-up to the conversations that we've had today. It's around cash flow, forecasting. I mean, how do you make that shilling stretch a little further, right, during this time? So it's a session you really want to get into. We have partnered with USIU Africa as well. USIU Africa are our partners at ABSA for coaching. They also run an SME entrepreneurship program for us. So we'll give very practical insights around how do you actually now, and Linda alluded to some of those conversations around negotiating with your suppliers, your landlord, talking to us as ABSA to see how can we extend your repayments. And I must say that that session is a must if your cash flows have been affected. And I have seen from the polls that actually cash flows have been affected. So it's a key session for you to just make sure that you don't miss. So at this time, I want to say that we are still receiving requests for repayment holidays at ABSA. We are extending we have up to 12 months to extend the repayment period. So please feel free to talk to your relationship manager or your branch manager, or you can just send us an email on the Business Club email address, and we'll be able to get back to you and see how to support you. So from us, really want to thank you for your time and pray that you continue to keep safe. God bless. Thank you.
Thank you.
Thank you.
Thank you, everyone.
Thank you.
Thank you. Yeah.
Thank you.
Thank you.